Good Tuesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you. End of the month, end of the quarter, but the real pleasure is I get to be with my two buddies, my best friends in life, Mr. Cory of Realty. Welcome back. Wait, 2 days in a row, and the little bird told me that we get you on Thursday also. So life is good, Cory. Life is good.
It's a holiday week, man. I couldn't think of a better place to spend my 4th of July than with you guys.
Exactly. You heading out of town? You always head up to the lake over the 4th. You heading up there this time?
No, we decided not to this year. Like, stay out of the crowds and stay down here. So
Yeah. Keep the sanity a little bit.
Yeah, try to. Exactly.
Well, I expect that homemade vanilla ice cream at your party for the 4th of July this year.
I will find somebody to make it, and it'll be here whenever you want to show up.
I'm going to make the rounds. I'm like Santa Claus. I'm going to make the rounds on 4th of July. I got a bunch of friends that we'll see in Reno on 4th.
Oh, yeah.
Dwight, Millard, on Q Home Loans. Welcome back, my brother. We missed you on Thursday. I know you were a bit under the weather, as we told everybody. Hopefully you're feeling better and you're as handsome as ever.
I wonder if it's just mortgage, sickness or something. I don't know. I didn't feel good, but it's good to be back. I mean, I just feel beaten and battered all the time, but we'll get through it, right?
Let's talk about it. Let's talk about it. Why are you feeling beaten and battered?
Wait, you gain a little ground, then you lose more ground than you gained. And people are getting very short-tempered, let's say. Their patience their patience is wearing thin when it comes to this. I mean, it's interesting, John, because you start out telling somebody something and then it's different in a week or 2 weeks. I don't control it. I don't control it. And everybody's just trying to gain extra money, from the homeowners insurance we've talked about to everything's just costing people a lot more. And I guess I'm the guy that they take it out on,
right?
Because I'm the one that you have to show up and make the check to. So it's just a difficult time, because this is, John, we're now, March of 22, right? I mean, we're going on 4.5 years of this, mess.
Unfortunately, with no relief in sight. That's the problem.
Yeah. And I think people get a little bit of, I don't know what Cory sees, but I think people start to feel, they see some headline, John, we always see, and they start to feel, here's my opportunity. This will, and I would have to think that there's still quite a bit of cancellations out there. We did a show on that at one point in time, with the cancellations, but I still got to be out there because, it just not coming. The affordability is just not kicking in for these people.
Well, I mean, Cory, how's we're a little off tangent, but this is important stuff. How will affordability? How will it ever, if ever, will it ever come back? I don't see it happening, guys, because you hear the inflationary numbers, the CPI, the PPI, the PCE numbers. There's no break in sight. So how can we expect some type of a break on inflationary pressures on the housing market, Cory? Or can it?
The system breaks. I mean, at some point that'll happen. I'm not saying it's today, but it'll happen. I mean, I can share with you conversations I had yesterday that were incredibly eye-opening to me from developers.
Really?
A deal that we're going through right now that will kind of echo Dwight's point that he just said, that people are kind of at their wits' end. And so everything he just said has happened to me in the last 24 hours. So if it's happening to Dwight now, you can imagine across everybody else. So yeah, it's the rubber band is very stretched at this point.
We see, folks, that's the value of this show, is these two gentlemen in the trenches, like I am on the stock market side. They are in the trenches every day. You don't hear this on CNBC or Bloomberg or anywhere else, right? You got to be in the trenches, living, eating, breathing, and talking to human beings, right? That's what you guys do every day. You're talking sitting across the desk, wherever it may be, and you're hearing this. So again, invaluable. I'm going to press you on this a little bit. Cory, I'm going to go back to you. Can you share with us what this discussion with this developer? Because that's important.
Yeah, so two different kind of things. But yesterday I had, without giving out all the specifics, I had a conversation with a really good friend of mine. They deal with a lot of incredibly large land acquisitions and sales. And I mean, just they handle pretty much everything in this entire area, period. And we were just talking about a piece of land that we were both kind of looking at, but he's shared with me that they are working on a huge, huge, huge project right now. And again, without getting into all the details, the cost to improve this raw dirt into finished lots was, I don't want to give out the exact numbers, but it was more than what a national developer would be willing to pay, period, for the finished lots. So the cost to get them there does not even include the land that you have to purchase.
Wow.
And so when we did the math backwards if a developer was to come in and buy, and this is a very large subdivision, if they were to come in and buy this at that cost, plus buy the dirt, plus build the houses, that initial thing would have been almost 50% of what they could charge for that house.
Wow.
And it's crazy numbers. And needless to say, the conversation went to this massive deal was in escrow, and it completely blew up because the costs to get it to where it needed to be were just way, way, way outside the bounds of what anybody could think of.
What are they looking at, Cory, when you get to that level of land development? Interest rate costs trump what Dwight dealing with the home buyer, right?
Sure.
I mean, obviously we're talking millions or if not hundreds of millions of dollars. These guys are savvy. So if they can't pencil out to make it work, what does that mean for everybody else?
Well, the interesting thing with this specific scenario is the companies that would buy this, they don't need to go to their local bank. They go to the stock market. They raise debt. Sure. There's always going to be an interest rate component in it, but it's not like they got to worry about a mortgage rate. The interesting thing on this was, even aside from that, let's say that they were just paying cash, the numbers are completely upside down, period, because of the cost that goes into turning this raw dirt into finished lots now is just astronomical.
So you don't have a lot of raw costs going into developing a lot. You have.
Are you kidding me? That's where all your costs are. So if you take, let's say you take, again, no, I don't want to get specific. Let's say you take 500 acres and we're going to turn into 250 home sites. To get it to finished lot, I've got to go through all the municipal stuff, which is going to take me, if you don't have your lots already papered, that's going to take you a year and a half. Easy. In the city of Reno, maybe longer. Then you got to do your undergrounds. Then you got to do your streets. Then you got to do your sidewalk. Then you have to do, he was telling me one development, the county pushed them so hard that they made them improve four water tanks that had nothing to do with the property they were improving. It's just a push. So there are, to give you an idea of the numbers of this, at the cost per lot that this would have been, the number was $150 million to go from raw dirt to finished lots. So it's a huge
which
chunk
could
of
sell
money.
For what?
Well, you got the finished lot, which these are production homes, right? These aren't, anything special. So the house is on
that raw, but you're going to sell that raw dirt to a developer, right? They're
correct.
Coming in, they're developing the raw dirt into buildable lots.
So big national builders do not develop dirt. They buy finished lots. They do not want to get involved in the entitlement process. It's too messy. There's too much distraction in it. So they will buy a finished lot. Again, in this specific instance, these lots were going to cost close to $250,000 per finished lot. Now, a developer that comes in might be able to sell houses on those lots for $700,000, $650,000, depending on where this was. Right. The numbers just make absolutely no sense. It just doesn't work.
Not enough profit once the sticks come out of the ground.
You're going backwards.
Wow.
Yeah.
Dwight?
It's interesting, John. I had that conversation with a builder today that the misinformation that these builders' margins are where they're at, where they think they're at, they're not even close. And to Cory's point, that's why. So when they come in and say, "Hey, I want $50,000 off the sales price, I'll buy your house," they don't. My suspicion, and I'm not. Listen, my dad's was a builder when I was growing up. I get it. They take a lot of risk out there that people don't, account for.
But guys, these major Wall Street firms, they're making money hand over fist, at least on the quarterly earnings numbers they are.
So remember when we did, was it D.R. Horton or whoever we did that day, their numbers came out and we took out their it was a quarterly or annual profit divided by how many homes they did. And their profit margin, you remember that? And I don't remember what it was, but it was minuscule. So they're doing the Walmart stuff.
Right.
They're going out and saying, yeah, we can spread this out and maybe this will take us 10 years instead of 5, or maybe it'll take long. So they can spread out that cost. And come on, John, they do some financial engineering to make their quarterlies look.
I'm getting to the point where
very good.
Our listeners are not going to feel sorry for them when they ask for $50,000 off and you're saying they don't have much profit, but the quarterly numbers show they have profit. It's just, right, Dwight, it's in the money markup. It's the upgrades of the appliances and all of, so on and so forth. Right. So they're making money, but just not on the pure profit of the house. Right, Cory? I guess that's
correct.
What I'm getting to. Okay. I just want to make sure I'm clear on that. Yeah. Fascinating. And, again, there's really no relief in sight at this point. right?
Mhm.
So I think back to how this conversation started, Corey, back to the point where until something breaks, prices don't come down, right?
Sure.
From an inflationary standpoint, they're going to continue to rise. Dwight, from a rate standpoint, there's no sign that rates are coming down. So yeah. I mean, even if you got a 0.25% cut, even if worst comes out in the next couple of meetings and gives us a 0.25% cut, big deal. It's not going to do anything. You got to get on a sustainable path of rates coming down, but you also have to have weak economic conditions, right? To do that. So you do start to see the suppliers, the builders deal with, et cetera, start to lower their input costs. That's where it all starts. You look at the PPI number, guys. Remember, it came out last week. I don't know if you guys saw it, but what was it? I think we're up 4.1%. The wholesale level of inflation. That's just staggering. So just looking at an average of 4.1%, obviously different components of lumber and some of these other areas, I'm sure significantly higher than that PPI number. So.
But John, we had that conversation last week about affordability on the house, all the components that go into it. You're absolutely right.
Yes.
A quarter point's not going to do anything to anybody.
No.
You've got homeowners insurance. I mean, that is a big problem. And I'm not sure how they're going to solve this one. They're not even talking about it.
They need to nationalize it. It's the only way that I see. I hate
well,
to say that,
yeah, and that's like flood insurance. I don't know. I don't know if I agree, but yeah, I mean, I don't know how I saw a quote the other day for a mid 500 house, $250 a month, and it was basic coverage.
Yeah.
A month.
I believe it. Yeah. I'm surprised there's not more.
So, be careful.
It's a tough situation. Yeah, I know.
Yeah.
Well, that kind of ties in real quickly to our topic. Let me tell you what we're going to be doing. Cory and I began this topic on Thursday, and we only got just to a couple of our points. So we're going to continue this on, and it's going to be even better today because we have Dwight to talk about it. But, flipping homes can be, of course, one of the fastest way to build wealth, or one of the fastest ways to lose wealth also, right? There's a lot of ifs and buts about it. But with the boys today, we're going to continue this discussion on, again, what kind of market conditions do we need to maximize our odds of making money in flipping homes? How do we finance the flip? What are some of the biggest mistakes the guys see that investors make when they're getting into this area of the real estate market? And most importantly, is today's housing market an opportunity, or is it a danger? So really going to be enlightening. I'll come back. I want to give you the what happened in the market. Of course, we'll wrap up the month of quarterly numbers, and then we'll get right into our topic. Welcome back to the Jon Sanchez Show on Newstalk 780 KOH with Dwight Millard of On-Q Home Loans and Cory of Edge Realty. Hey, guys, breaking news. You ready for this? LeBron is gone.
I heard that.
Did you?
LeBron is gone.
Well,
where'd he go?
He's leaving the Lakers. I just saw the news headline a second ago in our last segment. Yeah, he's leaving the Lakers.
I saw the headline that he was leaving, but I didn't see where he was going. Doesn't his kid play there too?
Yeah, I'm sure his Bronny. Yeah. I'm sure he'll go too.
Oh, that's going to be a big one.
Interesting.
Have to look that one up after this.
Is he still good? I don't watch basketball, but he's been around a long time.
He's still amazing. Yeah. Worth over $1 billion.
Think he'll end up in New York? They can make another run for it?
Ooh, that could be. Wouldn't that be something?
San Antonio?
Yeah, there you go.
With Wemby?
Yeah.
Probably, he definitely got to get with somebody that can compete, right? Because
Back
otherwise,
to Cleveland?
he's running out of time.
Yeah, another year or so, probably 1-2 years, and he's done. Yeah.
God, and now you made me feel real old because we used to watch him at high school on ESPN when they would break into his games.
Yeah.
Man,
who's
that's
this kid that didn't even go to college, or
wow,
you can go back to those days. Yeah,
that's amazing.
It really is. So yeah, we'll follow up on that one. All right, let's tell you how this market did. Then we're going to get to our topic: fix it and flip it. All right, so here's how we finished up on the day. Finished with a nice solid gain of 136 on the Dow, 0.26% to a record close of 52,319. NASDAQ up 394 points, 1.52%, closing at 26,213. S&P rose 59 points, 0.79%, finishing at 7,500. And the Russell 2000 up almost 0.5%, 0.46. That was about a 14-point gain. Okay, let's get to the numbers, right? Everyone's holding their breath to get to the end of the quarter. Well, turned out to be pretty decent after today's gain. And again, some of these quarterly numbers, and you think back what we went through the first half of this year with the war breaking out on February 28th and so on and so forth. Today, we did see, focus back on today, we did see some good strength in the semiconductors. It's been a while since we've said that. NVIDIA rose 2.6% today, AMD up about 7.7%, Intel up 6%. All right, for the first 6 months of this year, the Dow Jones Industrial Average posted a gain of 8.9%. That is the best first quarter performance dating back to 2021 when it was up 12.6%. For the first 6 months, the S&P climbed 9.6%, and the NASDAQ has outperformed those two with a gain of 12%. But if you think that's good, as I've been hinting to all of you for months now, I hope you heeded my advice. The Russell 2000, the small caps, gained almost 22% for the best first half, dating all the way back to when Dwight was born, 1991.
Yeah.
All right.
Perfect.
To the For the rest of it, let's go to Q2. Obviously, since we wrapped up the second quarter, S&P up 14.9% for the second quarter. Nasdaq up 21.4% for the biggest quarterly gains dating back to 2020. The Dow for the quarter gained 12.9%, marking its strongest quarter dating back to Q4 of 2022. So yeah, this is going to go down. And guys, I wish we had $1 for every time we had to talk about oil and all the headlines and Fed decisions and so on and so forth. But when it was all said and done, like the saying goes, you focus on earnings, and that in the long run, that always tends to be what drives the stock price. You can have all these existential events like the war and high oil prices, low oil prices, all that. And when it's all said and done, it just all comes back to the basic fundamental, kind of like in real estate, Cory, location, location, location. Stock market, it's earnings, earnings, earnings. That's the driver there. Finished the date on $1.30 on oil. We broke $70 again, $69.52 a barrel, $41.70 rise on gold, 4,040. And Mr. Millard, I have, you're going to be proud of me. I have put together a list of data for you to make your life really easy, because I know you're having a tough day. List of these bond yields. You ready for this? First, I want to get your take. Let's talk about today. 4 basis point increase, 442. How do we do on the 30-year?
Well, so according to Mortgage News Daily, and this is just, John, this isn't the whole story. You're up 2 basis points to 6.54. There were companies that had multiple reprices today. When you get into the mortgage-backed security pit, remember we moved up our barometer from 5 to 5.5. That's never a good thing, right? As a better indicator of what the market's doing. We were
Explain 41 that real quickly. You went to the next contract.
Yeah. So when you start to see trading and rates are going down, the trading at a higher rate than what's really happening, you're not getting a true picture. So they'll drop what they're measuring off of. And for a long time this year, we were at just the 5% coupon. Well, rates went up and it wasn't a clear picture at the 5. So we moved to a 5.5, which means rates are up overall. But the problem is even at that 5.5, we were off 41 basis points today is how we finished off. John, we get another, we get another day like, I mean, we'll be back in the 6.6 plus yield, which is just, this is where people are frustrated. And, they're taking their frustration out on,
The
multiple. Yeah. I'm a good one. I'm a good target, but it's just getting labor. It's wearing on everybody right now.
It goes down day after day, and you get blamed for it.
Yeah. Exactly and so I think hopefully this was, I don't know what caused this today. I saw that Warsh said something or indicated something. I don't know if you saw the headline there. I don't know what he said.
We had good consumer confidence number. That was about it. We had a Case-Shiller home price. Who cares about that? It's April's data. But economic wise, all we have is a consumer confidence number. 91.2 was a reading, a little bit harder than the prelim number a couple of weeks ago. But beyond that, I didn't see anything, other than the president owning over $500 million of cryptocurrency. That came across the headlines right before this show.
Right.
Okay, now Dwight. So here, let's recap. I gave you a recap for the quarter and for the month and for the year on the stock market. Let's kind of recap this. So we're going to focus on the 10-year Treasury for the month of June. 10-year Treasury was down, if you can believe it, 3 basis points. After all of that, for the month of June, down 3 basis points. For the quarter, up 11 basis points. Okay. Now I dug a little bit deeper for you, my friend. I want to see really where the movement was. And as I anticipated, it wasn't the 10-year, it wasn't the 30-year, it was the shorter end of the curve. Remember, that's the most interest rate sensitive, right? That's kind of follows with the Fed. Listen to these numbers. The 2-year for the month of June was up 13 basis points, up 34 basis points for the quarter. Just for the quarter, up 34 basis points, over 0.25%.
Yeah.
The 3-year up 8 basis points for June, up 32 basis points for the quarter. And the 5-year was up 4 basis points for June, up 24 basis points for the quarter. So the 30-year, again, going far out, it was only up 1 basis point for the quarter. So you see where that pressure is? It's on the shorter end of the curve. That's the most interest rate sensitive. And that right there, all you have to do is look at that, Dwight, and go, and you know this, I'm just being facetious with you. All you got to do is look at that and say, where's the pressure? It's the shorter end of the curve. And that the curve, the lower end of the curve, is what is saying the Fed is on an interest rate increasing path, not a decreasing path. That's what that tells you right there.
Well, John, if I look at Mortgage News Daily and went back 1 year, exact June 30th of 2025, 30-year fixed rate, 6.71.
Gee whiz.
So 6.54. So you're a little bit better, but it's been a rough year. All that gyration for
Yes. For what?
12
Yeah,
basis
that's right.
points. I mean,
Yeah, I know. That's
people
what
are
you look
losing
at.
their mind. I mean, it's just, it's really,
Real quick, I
it's
got to ask
tough.
you guys this. I want both your opinions real quick before we go to break. What I find ironic, and I was going to say this at the beginning of the show, Dwight, when you're talking about your frustration, don't you guys find it ironic that the consumer is this frustrated, but yet the other part of their life, their 401k, their investment accounts, they're doing amazing, right? And you just heard the data, incredible. I can't recall a time where people were frustrated with mortgage rates when the portfolio that they own is doing well. Usually it's portfolio goes down, they're frustrated no matter what the rates are. Do I make any sense
John,
there?
I think, it's just coming back to pure affordability. It's all the
Okay.
components that we
Okay.
talk about. So this little piece is doing good, but the whole picture, the whole pie is affordability
My personal
crisis.
cost of living's gone up,
Yes.
everything. Yeah,
Yes.
maybe doing good
Yep.
in my 401k
Yep.
or whatever, but
Yeah.
okay. Cory, you echo that?
Yeah, no, I totally agree with that. And most people think, probably rightly so, they can't touch their 401k on a daily basis when they got to go buy bread and milk
Right.
or make their mortgage payment or any of those things. So, I mean, it's good to have there as a little safety feature, I guess, so you can sleep good at night. But most people can't use them in their normal lives anyway, as far as the cash without a huge penalty. So it gets
Cory, did you see that story this morning? I forget what news service it was on. Down in Los Angeles, how the luxury home market is just beginning to boom. They're expecting incredible things because of all the people. SpaceX has a large operation down on Hawthorne. Dwight
sure.
knows where Hawthorne is.
Yep.
And of course, they're obviously significant multi-millionaires after the IPO. And the high-end realtors are like, we're getting calls left and right. I mean, we're talking 10, 15, 20 million dollar homes that these were people that just kind of lived either rented or in a normal home. Now they want to live on the beach in Malibu. They want to do this. They want to do that. They're saying it's going to completely change the demographics of the luxury real estate market in Southern California. And then, of course, you take that to Texas, right, Dwight?
Yeah.
Right.
Brownsville, where they doing this big,
exactly.
SpaceX down there,
Yeah.
just blowing everything up.
Some of the money, they said all the way down to cafeteria workers are multi-millionaires now.
Wow. Good for them.
Yeah, so that was interesting. All right, we come back, fix it or flip it. Let's see if we can make you some money doing that in the real estate sector with Cory and Dwight. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Cory Edgevich, Realty, Dwight Millard of OnQ Home Loans. All right, before we get to our topic, again, fix it or flip it, I want to give you a quick reminder. Tomorrow's the big night, folks. That's right. I'm going to be hosting my webinar, my educational webinar, the estate planning topic. It is going to be absolutely amazing. The 7 mistakes that people make in estate planning. And again, I designed this webinar for those of you that have an existing living trust in the estate plan, and for those of you that don't. How do you get involved? Real simple. Once again, it's going to be at 6 p.m. tomorrow evening. Just send me an email. Again, we're doing it the old-fashioned way. Jon, Jon, at specializedtrust.com. And I will turn around and get you that invite for that event tomorrow evening. You don't want to miss it. There's going to be a great amount of educational knowledge you're going to walk away from, again, whether you have an existing trust or a brand new one, or don't have one, excuse me. This event will be for you. 6 p.m. tomorrow. Again, we're going to have the webinar. Send me an email at Jon, Jon, at specializedtrust.com. All right, let's get to our show title, Fix It or Flip It, the risks, rewards, and the secrets to making money flipping homes. So real quickly, I want to do a recap, Cory, that you and I touched on Thursday, and then get down to new data. So we all know, of course, we've joked about it so many times on this show, television has made house flipping so simple, right? You buy a course or you just do it on your own, right? Everybody can make money at it. You buy an outdated house, you spend a few weekends renovating it, sell it for a huge profit, so on and so forth. But we all know reality is so much different. The ones that are successful that can do it, time and time again, lots of planning, lots of accurate budgeting, market knowledge, financing, great team, and by the way, a little bit of luck. Well, today we're going to separate the facts from the fiction as we discuss how to successfully fix and flip. So why do we flip homes? Again, we build wealth through real estate. We create additional income. We learn the investment business. We learn about full-time versus part-time investing, and so on and so forth. What are the best market conditions? Okay, this is where we left off, Cory. I want to start with you on this one. Give me your ideal market condition before Cory Edge and the team and your clients, et cetera, are really starting to look at flipping as another way of investing in real estate, making money.
The ideal market conditions obviously are a rising market and no competition. I mean, that would be the best way to go. But of those, you can do this form, you can make money, you can invest in these flips and do these things in any market. You just got to be a little more careful, right? Obviously, when the market is going up and working in your favor, you have a little bit more time to breathe. And if your project goes overdue, theoretically, the market will have been going up the whole time and save you to an extent. When the market's flat, as it is now, in my opinion, or going down, then you have to be very careful, because if your project gets delayed, or the money's more expensive than you thought it was going to be, or it takes you longer to sell the house, then you have both sides closing in on you, because the theoretical value of that property is either holding steady and not keeping up with your expenses, or worse than that, going down as you're trying to finish this flip. And you hit that point of equilibrium where you're underwater. And that can happen very fast, depending on
Very fast. Yes.
depending on
very
where you're
fast.
at. So ideal market is no competition, which isn't real life, but at least if the market's going up, that is helpful if you run into issues.
Who's your typical competition in the flipping environment?
So when we first started doing it, it was just, myself and a couple guys that were local, and nobody really knew what was going on. Now, if you get in there to try to do it, there's a lot of, they claim to be local, but they're national. They have national money. And so they sit in this market. A lot of them came to our market and other markets during the '08 crisis, when we were all buying trustee sales at the courthouse. And they have just kept teams around to now delve into those sales if they're available, or any other kind of market sales that pop up. John, when I put on any property, whether it's an estate, a divorce, or any kind of distressed property, the first 5 or 6 offers I get are from the exact same people every single time.
Are they really? Interesting.
Every time. And there's a couple, I don't want anybody to yell at me, but there's a couple smart ones that will say, I know what you're asking, but here's where I think the market is. So we're going to give you X based on what it is. And then there's some really dumb ones. Unfortunately, there's more of them that will come in and say, hey, I know you've already got it listed at a smoking deal, but we want it for another 50% off. And then we all just waste a bunch of time with paperwork, signing rejections. Like, it makes no sense.
Right.
But it's the same people every time.
How do they know it's a distress sale? That same 5 or 6. How do they know? Do they do research and go, oh, this is going through probate, or?
Yeah. So they'll have little keys in there if it's a probate sale, or you can look at the pictures and see the condition, or you can tell by pricing, right? Like they may have computers that do it now. I log on and I can tell you right away, because I know most of the streets if something's underpriced by gut feeling, and then we'll go in and verify it. But they know where it's at.
But Cory, let me ask you a question. I mean, not always is it a distressed market sale, right? They'll prey on non-suspecting people that have homes in bad shape. They go in and buy them and flip them, right?
So there's 2 different sides of the market. There's the market that gets put out to the MLS, the multiple listing service, which is 95. If you're trying to buy a good deal, that's not where you want to find a house, because now everybody's competing against you. And then the other side of the market is the stuff that's off the market. And that's where you have to be very careful, because as a property owner, you don't have all the information, even though you think you do. And these people will come in and give you what sounds like a fair deal when it's really not. And they will take advantage of you. They have no duty not to take advantage of you. And I see it a lot of times. Unfortunately, by the time I see it, it's been too late. Although I do get calls every once in a while from attorneys that are working on lawsuits. And so I'll jump in and help them, because they'll have questions about the process and what was said and what shouldn't have been said. And a lot of these people aren't realtors. For the most part, they're not realtors taking advantage.
That was my question. So they don't have the same regulations like you do.
No, a lot of them aren't realtors that are taking advantage. There's a couple in town that will. You got to be very careful with them. But for the most part, they're not realtors. They're individual kind of. I mean, I don't even call them investors. I mean, and I don't want to use the word savvy, because you're taking advantage of somebody. And not every time, right? If somebody's desperate for the money, they have to have it, and they're willing to give you the deal, then you're helping out all sides. But when you give the person the wrong information and you haven't told them everything, and unfortunately, there's a lot of that.
Yep, exactly. Dwight, let's squeeze this in real quick before we go to break. Let's talk about the financing side of things, because there's a lot of misconception. Cory's enlightened us over the years, of course, when we've discussed this. A lot of times it is private money or non-traditional sources. But as a lender, you have some pretty strict criteria to lend to somebody that wants to do a flip.
So John, let's just talk real. If you're buying a house to flip, number one, I really don't want it, because I'm going to get hit. If that's not on the books for 6 months, I'm going to get hit with early payoff charges. We're going to get back. I don't want to know you're flipping. I really just don't. If I'm going to come in, if you find a house that you want to rehab, you go, I'm going to buy this house. I'm going to buy it as you already own a home, so I'm going to buy it as an investment. I'm going to, in good faith, make that loan to you. But if I have an idea you're going to flip that, any lender, They have an idea you're going to flip it, we're going to step away. So therefore, that's why that private money becomes so critical and so important, because of you'll get down to the end, all of a sudden you'll slip and say, hey, I'm flipping it. I mean, it doesn't do me any good. They back charge my commissions. I mean, it's a nightmare. It's worse for me. So hard money is going to be your best. The other one, John, that we've talked about over and over years ago, or for years, is if you have equity built up in your house, you can tap into a HELOC. Maybe you can, put a good size amount of money down, or all of it, or put enough down that you might get a little seller carry for a little bit there. But it's going to be off the books type of stuff. Now, the other part to it is you say, okay, now I have the loan and I'm going to flip it. I bought the house, private money, fixed it up. Now I want to resell it. Conventional doesn't have too many real guidelines on that. VA doesn't have any real guidelines on that. But FHA, remember, you can't write the contract till the 91st day after you acquired the property. And then if you get into a big appreciation over 20%, they might ask for another appraisal. There's just all sorts of things you've got to be aware of for the takeout loan after you've finished it and you're ready to market it.
In other words, to cash out. You're not
you're gonna sell it to you're gonna sell it, and you better make sure your buyers have enough, loan products. And FHA is probably one of the biggest, John, on flippers. So you can't sell it till after the 91st
Okay, we
day.
get it. Let's expand on this when we come back, because I want to make sure everybody's clear. It's a very important point. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Cory of Edge Realty, Dwight Millard of OnQ Home Loans. Mr. Millard, your phone number, sir.
Yes, sir. 240-2022.
Mr. Edge?
673-6700.
Thank you, folks. All right, fix it and flip it. That's what we were talking about. And once again, we're not going to get through all of our points here. This topic just keeps going because there's so many things to talk about. Dwight, I'm going to turn it back to you. I want you to clarify a moment ago. You said about the 91st day. So let's lay out an example of what you're talking about, because that was a little confusing.
Yeah. So let's just say you buy a distressed house to fix up to flip, John. You're going to typically go to a hard money source, or you've got some sourcing somewhere that allows you to do it. Now, you bought it, June 1st, and you get it fixed up and you want to sell it to Cory. Okay. If Cory's using FHA financing, because that's all he's got, you cannot write a new contract until the 91st day. FHA does not do a flip inside of 90 days. They just won't do it.
From when
when you bought it. Correct. Okay. So if you bought it June 1st, then at 90 days, what is that? June, July, August, September 1st, or whatever.
Yep.
Then you can actually sell it FHA, which is probably 80%, I'm going to guess, John, maybe a little less than that, of what people use, especially with distressed properties. Now, when you do a conventional, if Cory can go conventional, or if he's a veteran, there is no time constraint, but you have to be careful about equity. So if you bought it for $100,000 and in 92 days you want to sell it for $200,000, there's going to be there, and mortgage companies can create anti-flipping policies, which would shut that down. You wouldn't be able to use a certain company just because of this kind of problems. Yeah.
Cory, what's the reality of that? As a flipper, would I need to be aware of who my potential buyer is and factor in that, hey, I may be done with the rehab in 60 days, but I've got to sit on it for another 31 days so I can open up my potential buyers to an FHA loan? Does that happen in your life?
Yeah. It does. Oh, yeah. Yeah. I mean, not only do you have to understand that and know that, but if you're not the person that's going to be selling, if you're going to hire a realtor, then you need the realtor that understands that. And these are things that somebody in this market that's been doing it a while should know. So if you buy in certain parts of North Reno, predominantly you're going to have an FHA buyer. You should know that before you buy the flip so that you can have your holding period. If you find a nice fixer up in Montreux and you buy it and you're going to flip that, well, that guy's not going to have FHA financing, so you don't have to worry about it. So these are all things that you should know before you pull the trigger on buying it. And I'm not saying it's the death knell, but you can just factor in, okay, I have a minimum of 91 days holding period. But as Dwight said, that's when the contract's signed. So I got 30 days after that before I can close. So I've got a minimum, probably 4.5 months of owning this. So I need to make sure my numbers account for that.
Cory, you and I have a lot of experience doing this. We touched on this a few weeks ago, and we're going to be bringing this back, and that is the self-directed IRA. How would this flipping strategy work with a self-directed IRA?
You would have to have a phenomenal team, because you are not allowed to go add any equity is what they call it to that property, meaning you can't change the locks, you can't swing hammers, you can't go lay the sod, you can't do any of that stuff that would improve your retirement account. Let's put it that way. Which means you're relying 100 on third-party contractors, which isn't the worst thing in the world, but you better trust them, because if the plumber calls in sick one day and the deal's supposed to close tomorrow and the toilet's not in, you can go fix it if you want. But like you said, the chances of the IRS finding out are slim to none. But if you want to walk, that's not a line I walk. So
No
if you
way.
want to walk that line, that's up to you. So you just have to have a phenomenal team.
Right. But the advantages, of course, is back to your point, Dwight. If you have a $500,000 IRA, and again, you got to contact Cory and I to get details about it, because I don't have time to go through the details. But if you had a liquid $500,000 IRA and you go buy a house for $300,000, the IRA is going to own it. Again, a lot of rules you have to follow, which is why you need to contact us. But if you sell that $300,000 house for $100,000 profit, zero tax, because it's all sheltered in the IRA. Right. And you're essentially borrowing the money from yourself. And there's a lot of advantages. Last question, Cory. Unfortunately, we're just about out of time. Good market or bad market right now to consider flipping? Where we sit right
It's a good market if you can get a good enough deal, because to me, the market is stagnant. It's not going up enough, in my opinion. So that means whatever retail is right now, you need to buy at whatever percentage underneath retail and then expect to sell it at today's price, versus buy at today's price and expect it to be 30% higher.
Right. Perfect. Great job, fellas. We will do it again tomorrow on the Jon Sanchez Show. God bless. Have a great afternoon.